People want to make money. People are investing to have a return. People like me want to make money for our future to do whatever we want in our future. Retire, live a little more comfortably, whatever it is. Maybe go out and buy something that you want to have in your life, a boat, a snowmobile, a new car, who knows, maybe a new set of golf clubs. But when we invest, we have a reason, a purpose behind it. And the community that we talk to, you and me, we are mostly involved in high yield distribution paying ETFs. So today's video, I want to talk about, you know, the mindset of switching from one to another. And I want to take a look at the other as well over the last, 4 months, since around July 30th, I believe was the date, I started buying ULTY, which is an ETF provided by yieldmax. Ulty is its name. And it touts, really high distribution in the 80% return rate, so says the website. But, we've seen some share price slippage over that exact same period of time. So what I've noticed is that a lot of people in the comments are making a switch over to another fund called WPAY. So this video, I want to talk about WPAY a little bit. This is not financial advice. I'm just kind of sharing what I'm looking at, where I'm looking at it, and I'm kind of showing you where you can look at it too if you want to dive even deeper than I do on this video in terms of, resources for you to be able to educate yourself on if this is a good move for you or not. Because who am I to tell you or anybody else on YouTube to tell you what to do with your money? Because I'm nobody, right? I'm just a guy on YouTube sharing my story. So I have a few screens for you to look at. I hope this video is entertaining for you. And if it is, I hope you hit the like, the subscribe. My name is Mike. The channel's name is Health and Wealth. And I really appreciate you showing up today to take a look at the video. First thing I'm looking at here is actually a spreadsheet of mine. I recorded this on Thursday. This is Thursday's ULTY video. I'll go ahead and link that video above, also at the very end of this video if you want to watch the whole thing. But I noticed on Thursday, which was the 23rd here, that Ulty had $2.94 billion in its assets under management. So that's quite a bit, right? It's a huge fund, but you can see that it started slipping here. The share price of Ulty started coming down. Here's the share price right here. Over the last month, down 7%. Now, if we take a look at this graph, you can see it was quite a ways down. It actually dipped under the $5 region for just a few minutes, a few days maybe. But yeah, it got all the way down to 488 there. So that created a big scare in the ETF itself, and it caused some people to sell. And I don't blame them for that. I've got my own strategy. I've stopped investing my own money in it, but I'm letting it drip. But again, watch that Ulti video to see the whole thing. But here's the assets under management today. Today's Saturday, 2.82 million. So you can see between Thursday and today, we've got a big drop here, right? It was 2.94 billion. Now it's 2.82 billion. So some more sell-off. But I think Friday's, surprise, the market came up a little bit, probably helped the cause a little bit there. But where are the people taking their money? So a lot of comments mentioned that I'm switching to WPay. Again, this is not advice. I'm just sharing what the comments said. They said I'm switching to WPay. And I wanted to take a look at the distributions and the fund itself. I want to talk about one of the comments, which I thought was pretty funny. So with Ulty, they're touting approximately an 80% return, but that's not necessarily true. It's around 61% return. I think I did the math on Thursday. So, 61% annualized return on your distributions, but that doesn't take into account your share price going down or up, right? So that's all about the distribution coming back to you. So let's talk about WPay here. WPay, you can see, is about 10 times the cost to buy one share. Yeah, there's this funny video on on the internet. The guy talks about 10xing that. Oh man, I can't get enough of it. Uh, he makes fun of these billionaires who talk about 10x that. Anyway, so this is about 10x that share price of Ulty. Now, this is a relatively new fund. It just came out here in September the 4th. Since it came out, it's up 3.88%. I always like to exercise caution on these new funds. They like to come out um, and pay out huge distributions at the start. They pick winners to go in here, that sort of thing. So I'm a little bit cautious of what I put my money into at the start of the fund. But it's been really good so far, right? Really, really good. So what is Roundhill's weekly pay fund here? So I've gone ahead, clicked on the website. I've cruising around the website here. Basically, Roundhill has a whole bunch of different funds that pay out every single week. They use a little bit of leverage in these funds, and so they've kind of combined all of these as an all-encompassing fund to pay you weekly. So all of those, let's go through them. I'll go through a couple different things on the page here. Here's some of them here. Transparency reasons. I actually, I don't even know what one of them is. And you know what? I said I should look that up, but then I said, nah, I don't want to. So you tell me what it is. We got the Robinhood option play here. We have the Apple, the Amazon, the Coinbase, the Google, the Meta, Microsoft, Palantir, Nvidia. This one, AVG. I don't know what that is. Tell me what that is, everybody. I need to know. The Berkshire Hathaway, the Strategy one, MicroStrategy, Tesla, Netflix, and then they got the First American Government Obligation Fund down here, which it seems every fund has that in there too. So one of the comments that I thought was really funny was that I'm switching from Ulty to WPay because WPay is diversified. Well, if you look at both of the funds, right, apples to apples here, both funds have a very like many different companies within it. Okay, so diversification is a fun word to use in that sense. So yes, they have different companies, but a lot of the companies in both funds are in one sector, which is tech, right? So if you look through here, we got a lot of tech in here. Like almost all of them are tech based. I know like Berkshire Hathaway's pretty well rounded, right? If we could copy uh, that one, that actual fund, then life would be good. But you got your tech in here, right? Let's go through it. We got AMD tech, right? Chips, Robinhood tech, stocks, Apple tech, Amazon tech, AI, Coinbase, finance, crypto tech, uh, Google tech, Meta tech, Microsoft tech, Palantir AI tech. You see what I'm saying here? Nvidia chip tech, our mystery one, AVG. Mister, right? Tech, finance, crypto, Tesla, tech, Netflix, tech. So when we say diversified, well, if the tech has a massive downswing, then we're in big trouble with this investment of WPay. Same with Ulti, though. Ulti has a lot of tech in it as well. So whenever you say it's diversified, sure, it has a whole bunch of different companies, but they're all in the same window out there. So let's take a look at some other things here for WPay. And I just want to try and keep this as real as possible with you. I hope you're enjoying the content. I'm not invested in this, but the door's open, right? Who knows? Maybe I will one day. Right now, it's not something that I'm focusing on. I'm still working on a couple of other funds before I move my money to something different here. But there's the distribution so far. So far, it's paid out 6 distributions, which is pretty cool. Highest payment was 88 cents. Lowest payment was 51 cents. So pretty good. That's for sure. Pretty good. I actually did the math before the video started. If you take an average of all of these and then divide it with the share price, it's about 69% return annual. About give or take, a couple of percent there. If we have another couple 51-cent weeks, then that's going to bring that percentage down. If you have another a whole bunch of 85 cents, it's going to bring that percentage up. But right now, an average all of these divided by the share price is about an average of 69%. Now, that's incredible, especially if that share price can kind of hang out right here. Over the last 5 days, it's down just a hair. Not too bad, though. Over the last month, up 1.31%. So everything is looking good so far with WPay, except for that diversification thought process, tech. But I know that the Roundhill people are adding a couple of more funds to WPay here because they've just implemented a couple more weeklies that they're doing, and they're just going to include that in this basket fund here. I want to keep going. So I actually looked at some other things. I think it was Fact Sheet here. I would highly recommend checking out the fact sheet, the summary prospectus. Let me click that, see what happens. I was going through it last night. There was some really, really good stuff in here. So before you buy, I would definitely read through these. There is a lot of boring stuff in here, but it could be good to know what you're getting into, obviously, before you get into it. One of the things is the management fee here. So they want to charge 1.28%, but they have some sort of waiver happening right now of 0.29%. So they're charging 0.99%. That seems to be pretty standard with all of these funds. Now, Ulty charges a little bit more, right? They're charging around the 1.28 or 1.32%, something like that. So you're getting a bit of a waiver discount here with Roundhill on the fund. There's some of the funds, not all of them, because like I said, I think they're adding 2 more coming up here. But there was some really good stuff in here. Oh, here's what I was reading. Yeah, the principal risk section. I love this section because there's some fun ones in here. Market risk, like they're just covering their butts, and I think you should cover your butt too and read the stuff to understand before you invest what could happen. If we have a downturn, prolonged downturn, not going to be good for your share price. Remember, one of the things that's making money for this fund is leverage. And so if we have a tech downswing, that leverage is going to get blown up. Now, I think they have a modest leverage, not like a high leverage. I think it's 1.5%. I read somewhere in here. I could be wrong on that. So you read it. Okay. Tell me. Yeah, I mean, if the market tumbles, could be bad for the share price here, also for the distributions that are coming your way. ETF risk, there was some good stuff in here that I really wanted to focus on, but they basically have all their ends covered over here. Inflation risk, I thought that was a good one to go through. Inflation risk is the risk that the value of assets of income from investments will be less in the future as inflation decreases the value of money. As inflation increases, the present value of weekly pay funds, assets, and distributions may decline. This risk is more prevalent with respect to fixed income securities held by weekly pay funds. Let's see here. Like they got all of it, right? They have a lot in here. Leverage risk. That's the one I kind of focused on yesterday. So, yeah, good one to take a look at for sure. And there was one more that I thought was quite interesting in here. Keep scrolling. There's a bunch, isn't there? Current market risk. There's some tax risk in there. That's something to take up with your tax person. Here's one, new fund risk. The fund is recently organized investment company with a limited operating history. As a result, prospectus investors have a limited track record or history of which to base their investment decision. I think that's really smart of them to put that in there. Absolutely. And yeah, this is, again, found on their website. 17 pages long. There's a lot of info in here, but I thought it was kind of interesting. Again, you can find all of this in here. That's the summary. You can read the whole bad boy right there, the big sheet on that. Here's the fact sheet on WPay itself. So, it tells you more information about WPay, how they actually make money for you. So far, looking through it, it's pretty decent. I mean, 69% return so far is really, really good. That's annualized, especially with the share price not necessarily moving. I think that's a really great thing if that share price could stay the same. But we know the market has issues, right? The market right now has issues, but it seems to be holding up pretty well. So, is it a smart move to just take your money from Ulty and then put it over to WPay? Well, here's the thing that I think about. Okay. It's good to pull a plug on a bad ETF or stock for sure. But what if this starts having a bad turn? Are you going to take the money from this and hop from ETF to ETF to ETF? Are you in it for short term, long term, medium term? The thing that I'm doing, and I'm not saying it's good, but the thing I'm doing is I've invested my lot of money in Ulti or whatever fund that I have it in. I just take the distribution, then go buy the next thing with that distribution. That's what I'm doing with my money. So I still continue to get the distributions from whatever fund I'm in. Now I'm building up the next one, the next one, the next one to have, pillars of income. So if I took all my money out of, let's call it Misty as an example, and put it into WPay. Well, when WPay has a downturn, am I going to take my money out of this one and then put it in that one too? For me, it just I don't love that strategy. So I'm going to continue just to build each fund to a plateau, and then I take it that distribution. I go build the next fund to a plateau, so on and so forth. That's just kind of my strategy with it. But I mean, just looking at it, everybody, I mean, it seems to be pretty good for sure. One thing to consider, right? This is 10 times more, almost 11 times more than the cost of Ulti. So one of the things that people are going to say is that you can buy 10 times more shares with Ulti, thus compounding a little bit quicker. But what's the problem with Ulti, everybody, is that over the last month here, the share price has really come down. Over the last, let's just call it March the 12th till now, share price has really come down 22%. So this has a bigger window, a broader window than WPay does. And, it also has paid out a lot more in that time period than WPay has too. So, um, who knows, right? Who knows which one's the better decision? But for me, let's say I was going to go to WPay maybe in like a couple of months or 3 months from now. I wouldn't just pull my Ulti. I'm going to let that continue to pay me. I like to call it till it pays me back my initial investment, but I'm going to take all those distributions. I'm going to build something else with it. Hypothetically, let's just pretend it was WPay a few months from now. Who knows what WPay is doing a few months from now, but hypothetically, let's say that. And then I continue to let that one build as well till I get to a cap of what I want to buy on that. And then I go to the next one, right? And so we hope, we fingers cross this bad boy that they can continue to pay out great distributions forever. Who knows if that's going to happen? Who knows what's going to happen with, say, the Ulti share price? It is on a very, very not so nice downswing right now. But again, the person who said, I choose WPay because of diversification. It's not really diversification in either of the funds. They have a lot of tech. What happens when tech falls? They're going to fall too. So I hope this video was educational, informative. Hopefully I helped you kind of find where to look up the information for yourself to see what the right decision for you is. Maybe neither of these are on your radar because they're too high risky. To be quite honest with you, I've really been thinking about once I'm done building up my Ulti, I might go to something a little less risky. I don't know if it's less risky, but in Canada we have this fund called HHIS. It's also super tech heavy. So, but it pays out just 26 cents a share now, and the share price is around 13.50 Canadian. It also has a small window of how long it's paid out, but it's a little less risky than these Ultis and these WPays out there. So I've been thinking about that one as well, just to let you know what I'm up to in my mind over here. But yeah, if you enjoyed the content, thanks for hanging out with me today. My name is Mike. The channel's name is Health and Wealth. And I did a live earlier today. Go check that out. I'll put that over here. And I'll put the Ulti video right here. I hope you have a great day. Bye for now.